That's philsgang.com.
philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And welcome to my podcast. Hi, I'm Phil Grande of philsgang.com. You know, it's interesting. Last night, I was flicking through the channels, and I caught Obama in an interview. Now, I'm not a political show, but, I mean, he was arrogant. He was I just can't find the words. But the first word that came to my mind is very arrogant, very cocky, very jealous, just mean, okay? And this guy, think about it, he's the one that is behind all of that's going on now with the investigation of all these people that were involved all these years with the Attorney General, who's under indictment, trying to take Trump down. I mean, if I were Obama, and he's going to escape everything because he's got immunity, but I would just keep quiet. I mean, why would you come out, especially a day after what's going on in the Middle East and what a wonderful thing you do? Why say anything? You know, to come in and say he's acting like a dictator, and one day after he does this, after the Mideast peace treaty, God. But the thing that gets me, let's take the politics out of it. Let's just go to healthcare. Obama healthcare is a failure. This is not politics. This is fact. Obama healthcare is the worst thing that ever happened to our healthcare because it has more than doubled your cost. From 2013 to today, it's up 130%. The only reason that some people are getting breaks is because states are doing these emergency plans to subsidize the doubling of your premium so you don't feel the pain of that double. But my point is he created the worst healthcare system. He can't give the president credit for the Mideast peace agreement, and he's calling him a dictator, and he arranged with the Attorney General and all these other guys to take Trump down. I'm not a political show. No, don't talk politics, but that really upset me last night because I'm going, why did he just shut up? Look at what he's done, what the wealth he's created. He gets $60 million for a book. For a book, $60 million. He's got houses. Hawaii, he's got a house in, I think, Vail or Aspen. He's got houses all over. The guy's rich as hell. He's got, how lucky was this man? You'd think he'd be on his knees, thanking God every day. God, how did I get this lucky? Look at my lifestyle. Look at the house I got on Martha's Vineyard. Look at the house I got in Aspen or Vail, wherever the hell it is. Look at the houses I have in Hawaii. Isn't that enough? You can't congratulate the president and say, gee, I don't like you. You're a Republican and I'm a Democrat. I don't like what you stand for because I don't like what Republicans stand for. But let's at least, I want to give you credit for what you did. And then stop right there. Why do you have to go on and berate him? I mean, it's just, anyways, I'm just going on and on. I was just so angry about that. I thought he had more class than that. I was really surprised. I was really disappointed. But anyways, let's go back to the fact. Obamacare is atrocious. And the states now, that's not free stuff. Remember, to get your, let's say your premium would be $700. Well, they get your premium down to, let's say, $300 because the federal government is subsidizing the states and the states are subsidizing you. But at the end of the day, our deficits are going up. That's right. So, yeah, it helps the folks, but in the long run, it doesn't because our deficits go up. It pushes up inflation. It's a terrible thing. And if you want to talk about something, why don't you talk about how terrible the labor market is? The labor market's awful. And I mean, we've got a labor market that is so bad. Job openings are so bad. We've hit a 10-month record in terrible job openings. And again, going back to now they're talking about. I mean, this economy is really bad. But now the Federal Reserve's talking about. Yesterday, he came out and said, Powell, we're going to keep cutting rates, right? Economy's doing good. We're going to keep cutting rates. Well, that doesn't help. Cutting rates don't help. I mean, it's like a Band-Aid, and cutting rates brings you more inflation. Terrible inflation. Cutting rates, it causes the dollar to weaken. When the Fed cuts rates, remember, it just destroys, okay? People don't realize when you cut rates, that's inflationary. And look at our dollar. When the Fed cuts rate, it reduces the value of the dollar. Also, our stocks, also the value of our bonds. People start buying foreign stocks. So we have a weak dollar, terrible weak dollar. We have a terrible job market. Our GDP growth is terrible. So what are they going to do to fix it? They're going to say, well, what we're going to do is we're going to turn around and expand our balance sheet. That's what Powell's going to say. The Federal Reserve will expand the balance sheet. Now, he knows that 99.9% of people doesn't understand what it means when you say we're going to expand our policy, our balance sheet. Most people don't know what that means. What it means is another QE. And so they're going to do another QE, and they're going to mask it by saying we're going to expand the balance sheet of the Fed, which means we're going to increase the money supply. And the only thing that's keeping this market going up every day is the increased money supply. Because if it wasn't for that increased money supply, this market would be crashing. But as long as we have the increased money supply, and they keep doing this, again, QE, and that's what they're going to do. It's another QE. Remember what QE is. QE is where the Federal Reserve calls the Treasury, tells the Treasury, print a bunch of money, send it over to me. And then Powell takes it, gives it to the five biggest banks in the United States. Then the five biggest banks go and buy 10-year treasuries to drop the yields down so that you can buy a car cheaper, rates are cheaper, mortgages are cheaper. But it's inflationary. So we always end up back in a bad spot. We need economic growth. Just like they're saying, boy, AI has really contributed to economic growth, to our GDP. No, it hasn't, because we import most of that stuff for AI. That's right. Most of it's imported from other countries. We're not making that stuff here. I mean, if you took and removed all the impact of these imports on AI, we'd go from an annualized real GDP growth over the first half of 2025 from about 1.6%, we would drop down about, 0.3%, something crazy like that. Again, if you net out all the jump in AI-related imports that contributed, okay, our GDP falls from 1.6%. I think it falls to like 0.5%. That's huge. So the next time you hear the jibber jabbers talking about how AI is contributing to our economic growth, it's just not true. But going back to QE, what they're going to do is they're going to turn around and they're going to print money again. And when they're going to say they're expanding the balance sheet of the Fed. So they're going to go print money, give it to the banks. The banks are going to go and buy 10-year treasury yields to drop those to drop down those yields, okay? But remember, when the Federal Reserve drops their rate, the rate they control, and that's the rate at which they charge banks, that doesn't mean that you're going to get a rate cut. Remember that. You know, most people hear, oh, the Fed cut rates. Oh, that means I'm going to get a break. Not necessarily. The banks make up their own mind. They don't have to give you a cut. Just because the Fed lowered the rates to the bank doesn't mean the banks are going to lower the rates to you. And when they keep on cutting these rates and keep cutting these rates, that's showing you the economy's not doing well. And again, when they cut rates, it keeps weakening our dollar. And so when you go to Walmart or Home Depot or Lowe's, you're paying more for stuff. So again, this whole thing about AI, and it's been the only reason this market keeps going up, and it will keep going up, is because, again, we keep on increasing the money supply. And as long as we increase the money supply, think what happened in 2024. The S&P gained 19%. The Magnificent Seven contributed 67%. 67% of that 19%. What are you, nuts? 7 stocks. Now take 2025 in 8 months. The S&P's up 13%. Oh, by the way, your 401k is only up 5%. The Magnificent Seven contributed 73% of the 13%. What are you, nuts? So the only reason that we still have this rally going is because we will keep increasing the money supply one way or another. And as long as we keep increasing the money supply, and that gives the CEOs of companies an opportunity to buy their own shares back to keep pushing up the market. And then every time the big institutions dump, and remember when they dump what I'm talking about. Remember, when you look at AI, you have 3 major chip providers, NVIDIA, AMD, and Intel. And those stocks will keep going up. And they'll go up on two reasons. One, stock buybacks and announcements. Every time they make an announcement that we're doing a deal with OpenAI, it goes up. Then you have the next 3 stocks, which are the cloud providers, Microsoft, Google, and Amazon. That's 6 stocks that's driving this whole AI craze. Now, you've got some smaller cloud providers, IBM, Alibaba, Oracle. But we're relying on this 6 stocks and 3 smaller ones, this whole chip provider deal and the whole cloud provider. That's what we're depending on. The dot-coms, at least they'll come out every day with a new IPO. There'd be 5, 10 IPOs a day. But just one of these stocks, just one, has to trip. And what's the trip? What are they going to trip over to take this market down? And you'll know. Remember, we got say 7 stocks, say 8 stocks altogether. Or let's expand it to a dozen stocks that are keeping this whole market going. One trip, that means one CEO decides he's not going to do stock buybacks. His stock will start tanking. When that stock starts going down, and then you have all these, tourist investors, not retail investors, tourist investors, they're gamblers, they panic because they're going to see the price of their stock go down, and they borrowed. We've never seen investors borrow so much money to buy stocks. It's up to over $1 trillion in debt right now. $1 trillion. That's what they're borrowing. And the minute the stock price goes down because the CEO is not going to buy his own stock back, then he's going to get a margin call. We got $1 trillion of margin debt. He'll get a margin call. And if anybody keeps asking the question, when will the stock market crash? When that margin call comes in, that's what happened with the dot-com days. That's what happened with the housing financial crash. The minute we had a crack in the margin debt and people panicked, they didn't write a check when they got a call and said, oh, by the way, your account, you got to send me a check for 20 grand. No, just sell my stock. So we got this huge bubble that can keep going up, and it's going to go up further if Powell goes through with expanding the balance sheet, which simply means he's going to do two things: print money to buy treasuries to get that long-term yield right down, and he's going to drop his own short-term yield. More when I get back on when this crash will happen.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
So, welcome back to Phil's Gang. Again, everybody keeps asking, when is the market going to crash? Well, we got a signal the other day that Powell says he's going to expand the balance sheet, which means he's going to have Treasury print money, ship it over to him. He's going to first reduce the Fed rate, the rate at which he charges banks, and then he's going to give to the 5 biggest banks a pile of cash to go out and buy treasuries so that your mortgages drop, car loan interest rates drop, and so forth. But it's not going to help. The whole thing that keeping this market up right now are margin accounts and increased money supply. And that's what he's going to do. When he says he is going to expand the Fed's balance sheet, they're going to do more QE, more printing of money, buying more treasuries, drop those yields down. And again, remember, just because he cuts rates, the Fed cuts rates, so the interest they charge the banks can be near zero. It doesn't mean that you're going to benefit. Many times the Fed will cut rates for the banks, but the banks don't give you the benefit of that rate cut because they take most of that money and drive it to CEOs for stock buybacks. People hear, oh, we're going to get a rate cut. That's great. No, do you know that if you take and look at who's really spending money, it's the top 1%. They're spending it all. Households who are making an average of $75,000 or less account for about just 9% of consumer spending. See, remember, you look at the stock market, and the stock market's going up nearly every day, and this tech boom we're having goes up every day. You think everybody's getting rich. No. Very few people are getting rich. Remember, the top 1 percentile controls 80% of those gains. Actually, it's more than that. It's about 85% of the gains. So think about it. The top 1%, they're getting very wealthy. That's where the consumption is coming from, and that's a real problem because they don't need anything. That's not how our economy works. The economy works based on let's increase productivity. If we can increase productivity, if we can take our money and pile it into business investment so that we have new machinery, new factories, new everything, so we can increase productivity, the more production, the wages go up, people feel good, sentiment's high, they'll spend. But the sentiment right now is so bad, they're not spending. And especially when you drive out of your driveway in the morning, you see your neighbor, and you go, hey, Jack, why aren't you going to work today? You sick? No, I got laid off. Whoa! That's like an arrow right through the heart. You got laid off, panic sets in. Now when the wife says, hey, go down the store and pick up some, well, all right. And he goes down, and he was going to buy that extra 6-pack of beer, or going to buy, so he doesn't do it. So this whole idea, our economy is booming, our GDP is growing, all because of AI. When you really peel the onion back and you look at the core, no. It'd be true if all this stuff for AI was being built here, manufactured here, but it's all imported. That's the first problem. The second problem is the people who are making money, all the money's being made is in the stock market. I mean, a tremendous wealth is being made in the stock market with 7 stocks. But who controls those 7 stocks? Do you think the guy who's making 65, 75,000 a year, got 2 kids, he's struggling. His 401k, he's not contributing to his 401k. He can't afford to. He can't afford to contribute. Coffee's going up. Beef's going up. Meat's going up. No, he can't. Insurance going up. And the worst thing that kills this country is Obamacare. It has doubled since 2013. So a guy who's making $65,000, $75,000 a year, he's not contributing. And we don't have good jobs. All the jobs now relate to all this AI. We don't have people trained for these jobs. So we got a very small fraction of our population spending. And those are our workers, our households. Those are the workers. And they can't get a good job. They're not trained for this stuff. So they're only, again, when I saw that number, I said, you got to be nuts. Are you kidding? They only account for 9% of the total spending in our country? The people making $65,000 to $75,000 a year, they're not spending. And they're not contributing to their 401ks because they can't afford to. They're paying for the kids' college. They're trying to pay their health care. They just don't have the extra money. Households below $60,000 income, they're really screwed. They're really screwed. So we always hear how everybody's getting rich and the economy's the richest, we have the richest economy in the world and everything's doing great and the economy's doing well. But when you dig down and look under the hood, only the top 1% are making a fortune. It's all from the stock market. And the problem is how they get the market to rally, these tech stocks to rally, they keep cutting rates. But when they keep cutting rates, that weakens the dollar. So the guy who has 3 kids, he's making $65,000, $75,000 a year before taxes, he's screwed. He's screwed. So, because when they do their QE again, they're going to print money again. And that's what Powell was saying yesterday. I'm going to expand the balance sheet, which means QE. And don't get confused, QE and stock buybacks. QE is where the government creates massive inflation by printing money to give to the Fed, that he gives to the 5 biggest banks to go out and buy 10-year treasuries to drop the yields down in hopes to stimulate you to buy a car or a house or a snowmobile, whatever. That's QE. First, the Fed has to drop its rate. And when it drops its rate, you don't benefit. When they drop the rate to the bank turns around and gives money to the CEOs for stock buybacks at near zero. So you don't benefit with that. So gold is going up because it's trying to send a message that something's wrong. And what's wrong is when you have the top 1% getting incredibly wealthy and everybody else, they're hardly spending. 9%, that's it. Households, 65, 75 grand, account for 9% of the consumer spending. That's just insane, just insane. So the problem is that when you cut rates, the Fed cuts rate, it reduces the value of the dollar, U.S. stocks and bond value drops. Everybody starts buying foreign stocks, foreign bonds. And then when you have a weak dollar, imports are costing us more. You go to Walmart, you go to Lowe's, Target, you go, oh my God. Look at these prices. I thought prices were coming down. Now, yes, weak dollar will benefit our companies who export goods, but we're not big exporters. We're not big exporters. Look at our trade imbalances. We're not big exporters. We've always said, let's just do one thing. Let's just build houses. Remember that we were one industry. Once they got rid of manufacturing, they said, okay, let's get rid of manufacturing. We want to be a financial empire. No more manufacturing empire. Let's get rid of manufacturing. We can make more money driving the financial sector, banking sector. All we have to do is shift all our products out to China and other countries. Let them build our stuff. Then we can get rid of then they got rid of the pensions, which saved these companies a ton of money, got rid of the pensions and put you into a crappy 401k, which is nothing but BS. I talked about it yesterday. It's a failed experiment. Your fees are hidden. You make more money on the S&P than you'll ever make in a 401k. S&P in the last 50 years give you at least a 10% return. That's without shorting. The proof is, take the last, since April, 401ks were up 5%, but the S&P's up 35%. And gold miners are up 93%, but your 401k's up 5%. See, gold's trying to tell you something. Something is terribly wrong. So, again, we can look at the stock market every day and say, wow, new high. Well, I mean, we have, 47 new highs in 2024? Already I've lost track, 30? We're only in 8 months? But if that's not dribbling down to households, to the people making $65,000, $75,000 a year, you're screwed. And it's not dribbling down to them. It's all going to the 1%. So the only reason that this market will keep rallying, and it can rally for a long time. Now you have to watch carefully, because one day, as I said, and I tell this to my gang members all the time, look, we always follow the money. When the market opens, we lose our opinion, we follow the money. They will tell us where the money is going. And right now, you got a handful of tech stocks, the money's going. I just gave them to you. The biggest chip providers and the biggest cloud providers. Chips, NVIDIA, AMD, Intel, cloud, Microsoft, Google, Amazon, and smaller IBM, Alibaba, and Oracle. That's where the money's going, right there. That's the industry. That's it. So, again, gold, if you miss the gold market, if you miss the miners, we're up 92% in the miners. Now, our gang members, okay, our portfolio alone, okay, is up over 40, 50%. And that's better than the S&P. But it's also telling you something's going to happen. Something's going to happen. But as long as you keep your eye on the money supply, as long as it keeps increasing every month, the market's going to go higher and higher, and it's not going to stop going up. Until the day they say, you know what, we're not going to do stock buybacks anymore, so we don't need the money supply. So there's going to be one big round, another big push is how crashes work. There's going to be one more big push. And when he said the other day, Powell, that he was going to go and widen his, the balance sheet of the Fed, that's QE and stock buybacks. Two different things. QE, print money to buy 10-year treasuries so the yields drop so that you get the incentive to buy something. Stock buybacks is when the money supply is increased, they shove that money to the banks shove the money to CEOs of these publicly traded companies, and they buy their own stock. So we got two things coming in very soon. More of their own stock buybacks, and we got more. And also don't forget where all this money goes to. The increased money supply goes to Wall Street, takes and plugs money into the margin accounts because they know they got to mask when the big institutions, know who the biggest sellers are of these tech stocks, of the institutions. The hedge funds are the biggest. They're dumping these stocks in NVIDIA, Intel. They're big. They're dumping these stocks like crazy, but we don't see it because you have the tourist investor, not the retail investor, the tourist investor. He's a gambler. He, as soon as it drops, he comes in and buys it, and the S&P goes right back up. And Wall Street will keep the margin account filled for that tourist investor. He'll make sure there's always money in there, so when the hedge funds dump NVIDIA, this guy will go in, borrow money, and buy NVIDIA. So follow the money, and you will know when the market is ready to crash.
You've been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.